residential has remained an area where funding is not moving at all.
I think demand should not be a problem.
Once the demand comes back, private equity, lenders, liquidity, all of that will get sorted out.
What happened is there was no regulator.
Too many regulations have hit too soon. There's no stabilization that has happened in this industry.
The actual construction cost not forms more than 10% to 12%.
Hi, welcome to the Property Show. I'm Jayashree Kurup, I'm editor MBTV. I have with me Kailash Babar, he's the editor of Realty. And we're talking about an industry which is starved of cash, the residential real estate industry. Are we starving this industry of cash? Kailash, your opening remarks.
I feel there is enough interest getting generated about Indian real estate among sovereign funds globally, pension funds, private equity funds who are looking at Indian real estate. But unfortunately, not much of that is flowing into residential real estate. Most of it is moving towards commercial real estate, logistics, warehousing, retail, all of that. The challenge remains, despite so many initiatives from the government side on policy front and otherwise also, that residential has remained an area where funding is not moving at all.
Ashutosh, just your quick overview of, is the problem with the supply, the demand, the finance? Where does this whole problem rise?
I think demand should not be a problem. India is a country which is rapidly urbanizing. The social structure is changing. We are now more nuclear families than before. The urban mobility is a lot more. People move jobs, move cities. The younger generation particularly is financially much more aware and prudent. They choose to rent rather than buy, especially in earlier stages of their career. So I think demand perspective, I'm not really too worried about that. The worry comes in, are we responding to the right kind of demand? Are we responding with the right product to that demand? I think there is a gap there. Secondly, I think from the supply side, I think we are not building enough houses. We are not building with the right kind of speed, for which there are important factors such as policies, and we have seen a lot of reforms over a relatively shorter period of time. Those positive effects are also with pain points, and those pain points seem to be continuing for much longer than most of us anticipated. I think there is enough capital which wants to get deployed in India. I think the problem is cost of that capital, which is a reflection of how lenders perceive risk of that sector. And risk involves so many layers. It could be very macro risks such as political or country level risks, to a very micro level risk which comes down to the local demand supply factors. We also need clarity, especially from policymakers. Do they treat this sector as pure industry? They don't give the industry status yet. They have given that for infrastructure and for affordable housing, but for real estate they haven't. Overall, I think we are moving in the right direction of maturity, transparency.
Ambar, when we talk about finance for the residential sector, policy, the bankers, the lenders, where does this whole thing sort itself out?
First of all, fix the interest rate, fix the fiscal side, the tax benefit, at least create parity between rental and NUMI. Fix the economy. Yeah. Economy has to grow, new jobs have to come about. People have to start feeling good about the fact that, look, tomorrow is going to be better than today, right? Only then the demand for housing is going to come back. Once the demand comes back, private equity, lenders, liquidity, all of that will get sorted out.
So, Ramesh, which comes first? Industry is in a crisis. Where does the first fix happen?
If you have to look at last 10 years, maybe 15 years, the investors used to come, and even the housing finance company started growing, and they also, numbers also increased from 30 to now nearly 100 housing finance companies. The banks started lending, then the interest subvention came in. So there were a lot of incentives which were given to the investors, and those who were not able to buy in this market or come in the market, they were given a leverage. So the greed from the purchaser side, greed from the the lenders rather, and everybody wanted to make some profit out of it. The industry could not digest it, and what happened is there was no regulator. The moment the regulator, any industry will pick up, wherever the regulators have come, it has started doing wonders. But again, there is a disruption which has created, and everybody is in panic. The developers are in panic. They are not ready to take up new projects. The investor also waiting and watching, and they want to walk out of this because they is not giving the expected returns. End users, they are waiting and watching as to what is happening. I think everybody is keeping and watching. And maybe in next 2 to 3 years, we'll find industry doing well.
In fact, I'll go to Binitha. Today, we would say that it is a crisis of finance.
In the last 15 years, I would say vision, policy and implementation has gone wrong for this industry. Because we saw the government come up with housing for all, and it was a great thing where they came up with demand numbers of 6 crore homes. But how the 6 crore homes will be built? Who will give us the capital to kind of build it? Because 6 crore homes, if you just say 10 lakh rupees per home, is at least 6,000 crores. 6,000 crore homes, and that kind of capital plus the capital to buy the land, then to build, then to deliver, then to find the customer who is passing today's banking norms of taking home loans. I think that entire loop or that circle was never found in terms of a fix. I don't think beyond the top 20 or top 15 in a city, the rest of the people are getting even bank funding or NBFC funding. So that is a fix which this government needs to come in, and there is fear. That is counterproductive. Because in crisis, when fear hits the mind of people, the little bit of, I would say, foresight or little bit of judgment call that people need to take while lending people shuts down. Home loans reducing in from September to now after IL&FS happening, that is a challenge.
Harshul, Binitha painted this grim picture of how many will survive. What does the industry body do to make sure that this is happening?
The MCHI, CREDAI, NAREDCO, PIATA, they all getting together, putting their voice in unity. And unity is very important because broadly we are talking with local body, which is India's richest, with a budget which has actually gone up 11% to 30,000 crores, with reserves and surplus of 70,000 crores. And what is being sought for is support. The actual construction cost not forms more than 10% to 12%. It's actually the government premiums and it's the interest cost which is actually killing the pricing point. So at one point, everyone expects housing to be affordable, and on the other side you have these charges making it actually unaffordable. It's really a time where all stakeholders, whether it's from the government side or whether it's from the industry side or the body, actually get together into solving this.
The judgment call that someone used to take 5 years back, saying that if I don't buy today, tomorrow the price will go up, it might be out of my reach. Today he's like, let's wait.
Speculation is not bad.
Oh, speculation is
Every
great.
market requires speculators and investors going out and buying stock, because that creates liquidity in the market, that creates maturity of the market.
Traditionally, everyone always looked at homes as something that you need to buy.
Globally, for hundreds of years, real estate or an apartment that you live in has been an investment. US has 70% mortgages to GDP, which means 70% of the people in the US, I mean, it's not a like-to-like comparison, but most of the people own their own houses, right? Some developed countries like Norway have 110%. China is at 24%. You know how much is India? 9%. It is not that millennials do not prefer buying. The only reason why they're not buying today is because of that dichotomy. For a 1 crore apartment, I'm paying only 2 lakh rupees of rent per annum. Whereas my EMI is 7, 8, 9 lakh rupees per annum.
They're not seeing the
That
effective
delta
return.
is too high. Number one, it impacts affordability. Number two, with inflation being where it is so low, the house prices are not increasing, so I'm not being compensated by that as well, right? So there is no justification to buy that apartment. If your inflation is at 2%, why is your fiscal deficit at 3.4%? When your currency has been stable, why are your interest rates where they are?
While prices have not gone up, costs have gone up. So even as developers, you don't have any way and mechanism in which you can sell at a price which shows some kind of a growth to someone.
And I think from a supply perspective, Binitha was right, saying that the input costs have only gone up. The government is positively reviewing at the premiums, etc. Hopefully they do respond to these changing times. The way real estate is constructed, the way real estate businesses are run are going to be very different.
Do you think these measures, these proposals will have an impact on financing for real estate and offer more liquidity so that we can resolve this issue of supply and also get better liquidity?
Down the line implementation of all these things that have come out, whether it is banks extending credit or it is NBFCs getting the liquidity needed so that they come in, has not had the impact. In fact, if you look at the very small data, in the last 2 years, the repo rate has gone down by as high as 0.5. From September to now, NBFCs have increased 2 to 3% of their cost has been passed out to developers on their developer loans. From the minute we get into negotiations to purchase of an asset, to when we get approvals, to when it starts construction and it gets completed, it's more than 7 years today. A developer goes through 3 cycles in 7 years just to finish one project. And the ways things are moving, okay, and the way from where they started in terms of a price aspiration to where we are today, in the last 3-4 years itself, that has gone down. So the assets that they have today, most of them will be completing it at negligible profit or just at cost, just to ensure what they have put out has been completed.
Amber, do you think last mile funding, if banks start providing that, or government creates a fund to offer that kind of lifeline, that will resolve the issue?
So yes, it will certainly help, there is no doubt about it, last mile funding. But again, my point is, it's not that last mile funding is not happening right now. It is happening right now to projects which are more than a certain threshold level sold out. Right? So if it's 70% sold out and you have a lot of receivables, and you know that after you completed 30%, out of that 30%, maybe 15-20% you can sell upon receiving OC and so forth. So that sort of a project, even today, the last mile funding is available. Even the existing lenders have sort of realized that, look, you need to put some money into the project for it to complete, and therefore at least you'll have some security. Today you have no security, right? So a lot of distress deals, stress deals, and all of those things are happening. That's, I don't think, a challenge.
2 things that each one of you, very quickly, what are the 2 things that you would like to say?
I think developers have been pinned, but accountability in terms of timelines of approvals. Second, I think increasing the sectoral limits so far as real estate goes in terms of lending by the banks rather than reliance on the NBFCs because of the cost of fund.
Binitha?
I genuinely think banks should come back to do land funding, because land is the basic need before which no one can actually build something on it. And second thing, I think for customers, earlier there are 2 parts for home loans. I think a complete ban on subvention that has come through is not a right move today. I think they should let it live out its life and then going forward stop it, because they put a complete ban today. And I don't know if you know, but stamp duty is not allowed in your home loans. It had been stopped 3 years back. And across the country, it ranges from 6% to 12%, which is a huge amount which needs to come back as part of your home loan lending. And the government definitely should allow the entire interest, because interest being so high, for your home loans to be a tax deductible sort.
Ashutosh?
First thing is allowing the urban local bodies to be not as dependent on real estate to earn their revenues. And second is bring in all those smaller developers who do not have credit history, because they were always funded by high net worth individuals or private money. We need to bring them into the banking system, so treat them as neutral parties, though they don't have credit history. Lend it to them and let them complete the projects.
Ambar?
Lower interest rates, much lower than where they are today, and tax benefit for EMIs.
Real Estate Regulation and Development Act has come. 2 years we have seen. They are trying to, make accountable only the developer. Now it is a time for them to bring the approval authority. There is a comp
Absolutely.
authority. Let that be made accountable. And when they are saying within 60 days, if the approvals are not given, so regulator let them hear and understand, and then they should also give a recommendation for ease of liquidity. Now when we say ease of liquidity, just to take the point, now the NBFCs or HFCs, they are not allowed to accept the direct deposit. There is no bonds which are permitted. Now it used to come through the mutual fund. Now the mutual funds have started withdrawing from NBFCs, HFCs, and there is no fund which is available. So what I suggest is let the government give. There was a talk that the HFCs getting regulated so well, so they should be allowed to raise the fund in the form of bonds, where the government will guarantee the bonds. So if that policy is getting implemented, I think HFCs will have a lot of funds, and then they can give in a staggered manner to the project fund or maybe to the end users. So I think that
And
will
the
help.
HFC regulation has anyway passed from the NHB to
To
the
RBI.
RBI.
Real estate has been seeking industry status that would help them raise funds at a lower cost. Has not been happening. I guess most of the real estate developers have been waiting for it for too long, and I think it's time that one takes a look at it and review this as a suggestion, because more than 250 industries and ancillary sectors are dependent on this.
It is a sector that has the propensity kickstart the economy and take it to the next level. World over, when there's an economic downturn, there is investment in real estate and there is investment in infrastructure. Will India follow that route? Thank you for watching The Property Show.
Please subscribe to Magic Bricks on YouTube and click the bell icon to get new videos.